This recording will be made available to you all once it's published after the event. And also, we have our benefits counselors, representatives from our business standing by to answer any questions you might have via our Q&A functionality. Chat has been disabled for this event, and we're going to be using the Q&A functionality, which you'll find at the top of your screen in the menu bar. It should be right beside the chat icon. But that's where you'll pop any questions you have in there, and we will answer those. And then if there are any of interest for the group, I will call those out at the end of the presentation. And so I'm going to have a presentation for you, and then we're going to take a little tour of the website and wrap things up. So I'll go ahead and get started. My name is Anna Weathers, and I'm the Service Delivery Manager for the Federal Flexible Spending Account Program, that is FSAFEDS. And today I'm going to talk to you about the Dependent Care Flexible Spending Account Program that is available to uniformed service members. So first question is going to be who's eligible to enroll for this brand new program. And so you are going to be eligible for a Dependent Care FSA as a uniformed service member if you are a member of the regular component of a uniformed service, or you are a member of the Active Guard Reserve of a uniformed service that's serving on Title 10 orders. And then you cannot currently be a member of the United States Coast Guard, the National Oceanic and Atmospheric Administration, Commissioned Officer Corps, or the United States Public Health Service. Those three entities are not participating this year, but do stay tuned because that could definitely change for coming plan years. If you're not familiar with a flexible spending account, a Dependent Care Flexible Spending Account, or a DCFSA, as we call them, is a pre-tax benefit account that you can use to pay for eligible dependent care expenses. Now, eligible dependent care expenses include care for your loved ones that are under the age of 13, a child under the age of 13, or care for a spouse or relative that's incapable of self-care and lives in your home. This can include services like summer day camp, preschool, child or adult daycare, and it is a smart and simple way to save money while taking care of your loved ones while you're on duty or away from the home working. Just a note that the DCFSA does not cover any type of medical, dental, vision, or pharmacy expenses for your dependents. The Dependent Care FSA is only for care for your dependents while you're away from the home on duty or working. Some examples of eligible Dependent Care FSA eligible expenses. You can use your funds for child care, things like nanny and au pair services, before and after school programs, summer day camp, preschool, babysitting. And on the babysitting, please remember that per the Internal Revenue Service rules, the IRS rules, a babysitter cannot be a dependent, another dependent. For example, you can't have an older child babysit for a younger child and reimburse them through this account. Then you have adult care items like adult daycare center or work-related custodial care, and other care associated costs, things like transportation cost to and from eligible care that is provided by your care provider, and late pickup fees. And then you can always easily find out if expenses are eligible by looking at the Dependent Care Eligible Expense page on our website at www.fsafeds.com/explore/DCFSA/expenses. With a dependent care FSA, you are able to use your pre-tax dollars to pay for qualified out-of-pocket dependent care expenses. The money you contribute to a dependent care FSA is not subject to payroll taxes. So in that way, you end up paying less in taxes and taking home more of your paycheck. And because a DCFSA must be used to help care for a dependent you claim on your taxes, DCFSA contribution limits are determined by your filing status. So if you are a married individual filing taxes separately, your maximum contribution is $2,500. If you are a single taxpayer or a married taxpayer filing jointly, your household limit will be a $5,000 contribution. And there, again, the minimum election is $100. Also, please note that if your spouse is a stay-at-home parent, then you cannot participate in a dependent care FSA. You and your spouse must both be working or have eligible student or disability status to participate in this benefit. And there on the slide as well, you'll see an estimated savings you could possibly save up to $750 with a maximum contribution of $2,500, or you could experience a tax savings of up to $1,500 if you contribute $5,000 to this FSA. And again, all of the tax savings are estimates based on your payroll tax, on your income and your tax status. For dependent care flexible spending accounts, when you enroll during open season is coming up November 13th and runs through December 11th this year. When you enroll during open season, day one of your plan year is going to be January 1st of 2024. And then you're going to have through March 15th of 2025 to incur your eligible expenses. So with a dependent care FSA, we have what's called a grace period. The grace period is an additional 2.5 months that we tack on to the calendar year to give you more time to incur your eligible expenses and use your DCFSA funds. If you're not familiar with an FSA, you have to use all of the funds in your account by the end of the benefit period, or they will be forfeited back to the plan. So in order to mitigate any risk of losing funds, we give you an additional 2.5 months to incur those eligible expenses. And then you'll have until April 30th of 2025 to submit your claims for reimbursement. There are a couple of other ways that you can enroll outside of open season. One being if you experience a qualified life event. So then if it's a very specific reasons laid out by the IRS, it could be the birth of a child, a marriage, things of that nature. So you would be able to enroll outside of open season with a qualifying life event in the coming plan year. And then same end date for your plan would apply. It would be March 15th of the following year, and April 30th you would have until to submit those claims for reimbursement. So as I was mentioning, so you can enroll during open season. This year is the first year. And then if you want to continue to participate in FSAFEDS, you would enroll each year during open season. It's not a passive enrollment. You have to enroll each open season in order to continue using the benefit. And then after open season this year, you can enroll in FSAFEDS if you experience that qualifying life event. And you can enroll 31 days before through 60 days after the date of that qualifying life event. And that has to be done before October 1st, or you'll have to wait until the next open season. We encourage you to use our DCFSA savings calculator. It's located on our FSAFEDS website at www.fsafeds.com. And you would simply click on the Support and FAQ Center. It's an orange tab on our website, and scroll to the savings calculators in the menu, and you would choose the calculator for the DCFSA account. Uh, this tool can help you see just how much you could save on your child and or adult care services by enrolling in a DCFSA. I highly recommend that when you go to enroll that you look at the savings calculator first before you ever click on enroll in a plan. Sometimes once you get into the enrollment module, and you're trying to play around with election amounts or different deductions per pay period, sometimes that can get confusing and you can wind up enrolling and not realizing it, even though we have lots of warnings and pop-ups to say, hey, you're enrolling. So you want to be sure to go ahead and figure out how much you would like to elect before you get into the enrollment module. And I'm going to show you on our website exactly where to go and what to do. So using your DCFSA is simple. You're going to be able to use your funds in your DCFSA as they accrue in your account. So as we take out, once you make your election, when you enroll, we divide that election up evenly among the remaining pay or the pay periods for that benefit period. And then we take out that amount pre-tax from each paycheck. And so as those contributions are taken from your paycheck and deposited into your DCFSA account, then those funds are available for reimbursement. If you have a dependent care facility that requires you to make a full year tuition payment at the start of the year, but before you've contributed sufficient DCFSA funds to be reimbursed, you can go ahead and submit that claim. And as funds accrue in your account, we will reimburse you against that claim until it's fully reimbursed. We have a variety of convenient payment and reimbursement options for your dependent care FSA that make it really easy for you to get your reimbursements for your eligible dependent care expenses. After you enroll, you're just going to return to FSAFEDS.com and log into your account online at any time. And you can check your account balances. You can submit new claims and view claim status. You can look up eligible expenses, select your reimbursement method by check or deposit, and you can choose to receive account alerts by email or text. Another easy way to manage your account is our FSAFEDS mobile app. You can log into the app using the same credentials that you use on our FSAFEDS website. You would just download the app either from the Google Play Store or from the App Store. And with the app, you can easily manually submit your claims. You can snap a photo of receipts. You can have your dependent care provider sign the claim form right on your mobile app. That's very handy. You can keep track of your favorite providers, check your account balances, update notification preferences, and you can view and edit your contact information and your profile. So when you go to submit a claim, the IRS, what's needed to substantiate that claim is dictated by the IRS. And they say that your expenses listed must be incurred by you, your spouse, or eligible dependent during the coverage period and the dates noted on the claim. You must also file your claim with appropriate supporting documentation. And that means you should probably save each receipt. And for quicker processing, you want to make sure that your receipts include all 5 pieces of required information. Your receipts require the name of your dependent, the name of the person who received the service. It requires the provider name, the provider that delivered the service. It requires the date when the services were provided, and it should include a detailed description of the service provided along with the cost of that service. Receiving reimbursement online is simple as well. You can choose to submit your claims as Pay My Provider and arrange for payments to be sent directly to your dependent care provider. You would simply log into your account online, select Submit Receipt or Claim, choose Pay My Provider, set up one-time or recurring monthly payment, enter the required payment details, and select Submit Claim. And then you're going to upload your digital copies of your detailed receipt that requires that 5 pieces of information. You can also choose to have submit a claim as Pay Me Back, direct deposit, or check. And so for direct deposit, you will set up that direct deposit during the enrollment process. It asks you for checking or savings account information, and it is the most secure way for you to receive reimbursements. Plus, there's no waiting around for a check. And in order to do Pay Me Back, you would just log into your account online, click Profile in the upper right-hand corner, select Reimbursement, Method buttons on the left of the menu, enter your bank name, bank account number, bank routing number, type of account, and click Save the changes. And please do remember that it takes 7 to 10 business days to establish that direct deposit account. So I hope this has given you some information to help you determine if DCFSA meets your needs and that you're able to enroll during open season. If you have any questions whatsoever following this event, we have benefits counselors standing by. They are available Monday through Friday, 9 a.m. to 9 p.m. Eastern Time. And that number is 1-877-FSA-FEDS. That's 1-877-372-3337. And we also have TTY support, and that is 1-866-353-8058. And there again, you see our web address, www.fsafeds.com. I'm going to check on questions here to see if we've got any that will be of interest to the group. I had a good question about if you're active duty military located overseas, is dependent care provided on or off base eligible? And it is yes, definitely. FSAFEDS will reimburse you, however, in US dollars. If you pay your provider in foreign bills, please convert the amount that you are submitting for reimbursement and enter in US dollars. But yeah, you will be reimbursed in US dollars. So I had a question about Title 32 AGR members, and at this time, they are not eligible, but there will be future rollout phases of our DCFSA program. So please do keep that in mind for coming plan years, but this open season, Title 32 would not be eligible. I'm going to go ahead and jump over to our website and give you all a tour of some of these things that I've been talking about. Okay, you should be seeing my screen now. So when you come to our homepage, there is one section I like to point out to everyone is our message board. This is where we're going to keep you updated on any changes to the DCFSA plan and other things like important dates and best practices for using your account. So I do recommend checking out the message board every once in a while. I also want to point out on our Explore Your Options tab, we have your own tab dedicated to uniform service members and their dependent care flexible spending account program. So if you have questions following this event, you can always come and check out this page. It's going to give you a lot of the same information I just discussed and maybe a little bit more detail. Here are the different ways. Again, you can submit your claims. You can do it online via the mobile app, or you can also submit a claim via fax or mail. I don't think we mentioned that, but here are the directions for doing that if you'd rather submit a claim form and mail that in postal mail or fax it. Again, here are the receipt requirements. You have to have a detailed receipt that includes all 5 pieces of this information to substantiate any claim that you make. And then also we pointed out down here, if you have more military specific questions, for instance, how the DCFSA works with other dependent reimbursement programs that might be out there, you can check out the FinRed site. We have a link to that here, or Military One Source. And I spoke about, you come to our website also to enroll. So during open season, you're going to go to enroll in a plan, and then you can scroll down and click on open season. So right now, of course, open season doesn't begin until November 13th. So open season is not available at the moment, but once it is and you click on that open season link, it will take you directly into our enrollment module, and it will start asking you questions, eligibility questions. Then it will ask you for profile information. You'll choose a username and password. Then you'll make your election and finish up your enrollment that way. That's all under enroll in a plan. And then, as I mentioned, that you can file a claim via postal, mail, or fax. Here is where you would come and get that dependent care claim form. You would just click there, and it would download a PDF for you that you can fill out, and you could actually mail that in or fax it. Some information under support and FAQ center I want to point out. So the FAQs, we have a whole section here. You can search by keyword if you have a keyword that you're looking for, or we do have categories, and we do have a uniform service member tile here for that category. You can just click there, and it's going to give you frequently asked questions about all things military related. So that's a great source of information. Then we also have our lists of eligible expenses that I went through. If you click there and scroll down, you're going to go to the dependent care FSA list. And scroll down here again, you can search by keyword, or you can just tab through our lists of eligible expenses. When you see a red X mark, it means that this expense is not eligible for reimbursement. When you see a green check mark, it means that that expense is eligible for reimbursement. So, and then we have also under the support and FAQ center, we have our savings calculators. Here I wanted to show you how they work. So our savings calculators, I mentioned, this is where you want to come to estimate your expenses and determine how much you want to elect for the coming benefit period. So you would choose the Dependent Care Flexible Spending Account calculator. Click there. And then you're going to see there are fields, blank fields that you will fill out with all of your estimated expenses for the coming plan year for those categories. So for instance, let's say you know you're going to have $2,000 in child care expenses, perhaps $500 for an after-school program and a care program, and then let's say you know you're going to have a summer day camp. That's $1,000. You tab on down and it's going to take you to this customize section. This tax bracket question defaults to 30%. If you know your actual tax bracket, you can update this and it's just going to give you a more accurate estimated savings amount. If you don't, you can just leave it at 30%. And then this section, the number of pay periods for deductions. So this you definitely want to make sure is accurate. And so you're getting an accurate number for your deduction per pay period. So it defaults to 26 pay periods. That means that you're paid every other week. Let's say, for instance, you know you're going to be paid twice a month. You can update that to 24 pay periods and then hit calculate. So what it's going to do then, it's going to add up all of your expenses and give you your total election for the year, 3,500. It's going to multiply that by your tax bracket to give you your estimated tax savings for the year of $1,050. And then it's going to give you that, it's going to take that total election amount divided by 24 and give you your deduction per pay period. So each pay period, you're going to have $145.83 deducted from your paycheck pre-tax, and that's going to lower your taxable income and then afford you that tax savings where you can take home more of your dollars. So I highly recommend using the Dependent Care Flexible Spending Account calculator before you go to enroll. And open season starts November 13th and runs through December 11th this year. So you're going to have that time frame to enroll for the 2024 benefit period. Now, when you go to enroll, let's say you enroll early. Let's say you enroll for $2,000 on the first day of open season. And then you're thinking about it, and beginning of December, you're like, oh, well, maybe I need to add some more to that. This is the only time of year, open season is the only time of year where you can go in and increase or decrease your election amount as many times as you like. But as of December 11th, midnight, December 11th, 2023, that election becomes irrevocable. And the only way you can change your election after that point is if you experience one of those qualifying life events, that are designated by the IRS that we spoke about. So again, you can go in from November 13th through December 11th and increase or decrease your election as many times as you like. But please be aware that December 11th, midnight, that election becomes irrevocable. All right, let me see if there are any new questions. I had a question about, can you use a babysitter outside of your working hours too? So that's one of the stipulations for a dependent care flexible spending account. The care has to be provided while you are either away from the home, working, looking for work, or going to school full time. Those are the only situations where that babysitter would be eligible for reimbursement through our DCFSA. Benefits of the program. So some are still a little confused of what the actual benefit is here. So if you have these eligible dependents that are under the age of 13 or an adult dependent that's incapable of self-care and lives in your home, and you're already paying for babysitters or adult care for these individuals while you're working or away from home, going to school full time, then you can start contributing funds to this dependent care account. And the benefit is that those funds are coming out of your paycheck pre-tax. So when they come out of your paycheck pre-tax, that lowers your taxable income, and then that allows you to take home more of your hard-earned dollars. You're paying less tax than you normally would. That's where the savings comes in. That's where one of the big benefits comes in. The fact that if you're paying these expenses anyway out of pocket, every year, every month, then you can take advantage of this program and enjoy a little bit of tax savings. We estimate up to 30% depending on your tax situation and your tax status. So that is what the big benefit to this program. So again, there will be a recording of this event that will be published and will be emailed out to all registrants. I do want to bring up too, if you're considering retirement in the coming plan year, you definitely want to take that into account when you're estimating your dependent care expenses. So if you're considering retirement with a dependent care account, let's say you're going to retire in June of 2024, you're going to want to estimate your expenses up through that retirement date. Now, whatever funds you accrue through your retirement separation date in June, you can use those funds for eligible expenses for the entire calendar year. So you can use those funds for eligible expenses up until December 31st of 2024. The only thing you won't get to enjoy is the grace period. Since you're no longer employed, you're no longer part of the service, you're retired, then you will only be able to incur eligible expenses through December 31st of the calendar year, and you don't get to enjoy that 2.5 months grace period. So retirement, sometimes that's something you want to take into account. So retirement, yes, whatever amount you elect for 2024, if you elect the full 5,000, then that full 5,000 will be divided evenly among the pay periods for that shorter span of time. So if you're retiring in August of 24, the $5,000. Oh, wait, that's not right. Sorry. The $5,000 originally, when you enroll during 2024, it's going to be divided up evenly over your full number of pay periods for the full calendar year. What happens is if you want to, and you're going to retire in August of 2024, and you want that full 5,000 available to use for dependent care expenses, then you can do what we call accelerate your deductions, and you can shorten that time frame and have that full 5,000 deducted before your retirement date. You don't have to do that. But then if you do that, if you accelerate your deductions, then you're going to have that full 5,000 to spend from January 1 to December 31. If you don't accelerate your deductions, you're just going to have available to spend whatever was deducted from your pay and deposited into your DCFSA through your retirement date. Okay, I hope that makes sense. There's some more information about accelerations and things like that on our website as well. And you can always call our benefits counselors after this and ask those questions as well. But our DCFSA, again, you can only be reimbursed up to what you have already deposited into the account.
Hey, Anna, this is, I apologize. I just want to make sure I've seen quite a few questions related to this. And I just want to, I know you've covered it, but I just kind of want to cover it again. So a couple of quick things. It is a reimbursement account. It's a flexible spending account, but you're getting reimbursed for claims that you're submitting for expenses that you're incurring, and so you're using how you're saving money. I think a lot of people have a lot of questions about this, and you're saving money in the fact that you're taking money out of your paycheck and reducing your taxable income. So you're putting away those dollars in an account that you then can use to reimburse yourself for payments that you're making for your daycare. So that's how you're saving yourself money. In today's world, you pay your daycare provider with your after-tax dollars. That you have to pay your provider. So you're paying your daycare provider in today's world with taxed income. So that's why it's a savings to you versus what you're doing today. Also, this plan, the Dependent Care FSA, is another account offered by FSAFEDS. There is a healthcare and a dependent care. Active military is only eligible for the dependent care. So if for some reason you happen to be on this webinar and you are currently maybe a civilian military member, you might already have an FSA. You would have already been eligible for this dependent care FSA. This is no different than the one that we offer for civilians. So I just want to make sure that's clear, because somebody asked about it being above the regular FSA, and I wasn't sure we'd be able to explain that enough in a comment. Hopefully that helps. Yeah, I know you did a great job of walking through for folks to kind of understand how you're saving yourself money, in the sense that you're taking those child care expenses, utilizing your existing tax rate to determine how much you're saving yourself in taxes over the year. But I thought it would be maybe, again, just another way to make sure people will know how to do it. And you'll learn when you go through the enrollment module, to the person who's asking about accelerating deductions, it'll give you an opportunity to determine how many paychecks you'd like to take the election from. So if you want to take it over 3 months, you can take it over 3 months. If you want to take it over 2 months, you can take it over 2 months. It's just at a minimum, it will come out of your paycheck on a 12-month basis, because the military is paid on a monthly basis. And you certainly can choose however you would like for it to be taken out of your paycheck, because that does allow you the opportunity then to have more money in your funds sooner, more money in your account sooner than you would obviously if you waited for the 12. Thanks, Anna. Great job.
Oh yeah, no problem. Thank you for further explaining that. I also want to point out too, when you submit a claim, there was a question about having to submit multiple claims over the year to be reimbursed. So if you have, like we said, a contract with a daycare provider that's for the entire year, you can go ahead and submit that as one claim at the beginning of the year, and then you will be reimbursed as those funds accrue in your account and are available for reimbursement. So you don't have to continue to submit a claim each month. If your claim includes all 5 pieces of information we need, like the dates of service, the dates that daycare is going to be provided, if it's on a, billed on a monthly basis, it'd have to include like January 1 through January 31st, daycare services provided. So you can submit that as one claim. So I don't want you to think you have to keep submitting multiple claims if the funds aren't available at that time. And in fact, you can submit a claim at the beginning of the year, before you even had a deduction taken, before the funds are even available, you can submit a claim at the beginning of the year. And then as those funds become available, you'll be reimbursed either via direct deposit, if you've chosen that, or via a check. Which again, we recommend direct deposit. It's just easier and more secure. We've had lots of great questions. So there is no carryover or rollover associated with a dependent care account. The only thing we have in effect is that grace period. That grace period is an additional 2.5 months. So for the 2024 benefit period, you're going to have from January 1st through March 15th of 2025 to incur all of your eligible expenses. We give you a grace period. There is no carryover of funds from one plan year to the next or rollover. So the federal limit is $5,000 per household for a DCFSA. If your spouse is eligible through a different company for a dependent care flexible spending account, your total contribution as a household can only be $5,000. You guys cannot each elect $5,000. You could elect 2,500 if you like, and then he could elect 2,500, but the total would have to be $5,000. And that is, an IRS regulation per household. Good question about retirement. So yes, when you retire, so for instance, if you're retiring in 2024, you can only use your funds, whatever funds have accrued in your account through December 31st. You will not be eligible for that grace period, that additional 2.5 months. So after December 31st of 2024, any funds remaining in your DCFSA would be forfeit back to the plan.
But just keep in mind, sorry, Anna, one more quick comment, because I'm actually getting emails about this as well. There must be a lot of questions on retirement. So if you retire, however, in the middle of the year, think about this too, though. There's a double sword here. If you retire in the middle of the year, you actually can utilize whatever you can submit claims for expenses that have incurred all the way through the end of December 31st that year, based on however much money you have. So, so in other words, you get the full year to be for eligible claims. Again, you're only going to be eligible to submit claims or you're only going to be eligible to receive payment for what you have in. Kind of think of it like your checking account. But the key there is that you can actually, if you put $5,000 in, I think you mentioned it on the accelerating your deductions. You put them in, and then you actually will have $5,000 for any claims that you incur, eligible claims up through 12/31 of that plan year. Again, you won't be able to take advantage of the grace period, but you still have the entire year's worth of expenses that you can incur and submit. So, and there's all kinds of information on our website that go into this, and our benefit counselors are always happy to explain it too, because sometimes it helps if you can explain your specific situation. So again, apologize, Anna, you've done a fantastic job walking through all of this.
No, you're fine. I appreciate the extra explanation. And lots of great questions. I'm really glad we've got a lot of good questions here today. I am going to hop back over and show our questions slide again. Contact us. Okay. Oh, so here again is our contact information. If you have questions after this event, you can contact our benefits counselors. They are available Monday through Friday from 9 a.m. to 9 p.m. Eastern Time. And that phone number is 1-877-FSA-FEDS. That's 1-877-372-3337. We also have that TTY support, 1-866-353-8058. And please do reach out. And again, we are recording this event, so a recording is going to go out once we publish it. Following the event, everyone that registered will get an email with that link to that recording. And I'm not seeing any more new questions. Again, please do feel free to reach out to us. We'll be happy to answer any questions you have. And thank you again for joining today. I appreciate you taking time out of your busy day to learn more about our program. And we hope you tell all your friends and give our program a try. Thank you so much for joining today.